You're muted, John.
Here, sorry.
Thank you. Mr. Dan Hopar?
Here, obviously.
Karen DeLucci's here. Also on the line, I believe, are, let's see, Brian Kidney, Chester Moyer, Mark Tillman-Berry, Jim Nail. Other people are going to have to identify themselves.
Councilmember DeLucy, this is Becky. You're having some sound issues. I'll go ahead and go down the list of people who are in attendance.
Thank you.
So we have Adam Norris, Brian Kidney, Chester Moyer, Cindy Gray, Erica Bennett, James Nail, Mark Perry, Nancy Cooper, Pam Coleman, Ron Luce, Sarah White, and Steve Wagner with City 7.
My goodness, we just keep getting bigger and bigger. Okay. The first item of business is approval of our 3 minutes, November 20, November 30, January 22. I think we should take them one at a time. Do I have a motion on the minutes of November 2022?
I'll make the motion to approve.
Second.
They've been approved. How about a motion as to November 30?
I'll make that motion to approve.
Second.
They've been approved. Now we moved into the great year of 2021. In the back window, we're seeing COVID go away. I'm looking at the minutes of January 22, 2021. Do I hear a motion for approval?
I'll make the motion for approval.
And seconded.
And they've been approved. New business. We all received our comprehensive annual financial report, the dreaded CAFR. I turn this over to you, Mr. Kidney.
Dreaded CAFR. Okay, thank you very much. And I'm having some audio difficulties also, so if at any time I break off, just if someone can wave at me to make sure. Many times when I'm talking about financials, no one really responds anyway, so I can't tell if I'm still connected or not. So as Chairperson said, we completed the comprehensive annual financial report, also called the CAFR. It was completed, I believe it was Christmas Eve, actually, when it was finalized, or maybe it was the day before Christmas Eve. And then all the required filings were made on schedule, which we were really happy and pleased with. It was a pretty, as you might recall, the prior year was a pretty difficult year getting it in place, but this year it was completed in time. One of the major factors on that, if you recall, we have a software called CAFR Builder that we purchased through Munis that we hadn't used the prior year, and that was one of our major audit responses and recommendations that we used it for this year. And I'm very excited to say that Nancy was able to get up to speed on it, learn it, and produce the documents that were required for that requirement that the auditors requested, and it was successful. The Munis software worked like a charm in what it was supposed to do, so we're really excited about that. However, for today, Chester Moyer's here. Thankfully, he's able to get on the line, and he will do the formal presentation. He has required communications that's required when he presents a CAFR or the audited financial statement. So he's going to go through that. I will point out we did talk about the single audit report, and I know that's another agenda item. I'll just go ahead and touch on that now. Is that because of the CARES grant at the end of the year, when the grant CARES money came out, there wasn't any guidance to the auditors, or actually to the users or the recipients, of how to report those CARES grant receipts. And because there weren't any guidance on how to report that, there was then nothing then for the auditor to be able to perform their single audit act on. And so General Accounting Office, GAO, they pushed back the requirements and the dates that those were required, and then also for the guidance. But talking with Chester, and he could follow up on this if you'd like, that it sounds like we'll probably get that part of the audit done in March, and we'll be able to bring the single audit reports back to you then in the April meeting. So with that, I'll just turn over to Chester for your presentation then.
Great, thank you, Mr. Kidney, and Madam Chair, or anyone else in the council, please chime in as you see fit. There was a document that I believe you've been provided. We call it our auditor communications document. It's like a PowerPoint presentation. That's what I'll be walking through today, some of the highlights that we can talk through. I'll do that for about 10 minutes or so and be happy to, again, respond to any questions or any inquiry that you have further about that. So what you've engaged us to do as auditors, Brian did give a summary of that. We're to provide a report on the financial statements of the city, which we refer to as the CAFR. We also, along with that, because we conduct our audit in accordance with government auditing standards, and Brian mentioned the GAO, we also issue a report on internal control over financial reporting, and that has been reported as well. The third aspect that you've engaged us to do is the single audit, the audit of compliance over the major federal funds. And we do expect it to be completed in March, and that will be still on time with all the federal requirements for that. So we do want to remind you that the purpose of our engagement is directed towards the financial statements and not providing absolute assurance, but reasonable assurance that there are no material misstatements included in the financial statements. And management, we work very closely with management in obtaining the information that we need in order to conduct our audit. But the bulk of the work that's not that we are auditing, that all is part of management's responsibility. So they're the ones that select the accounting policies. They're the ones that are responsible for internal control. They are responsible for helping communicate to us any matters that may impact our audit and providing us financial records, disclosing to us any known instances of fraud, and having, again, control process set up to detect those items. So we do work very closely with management, and we're very appreciative of the hard work they do in providing us all of our many requests. But I remind you, we are working for you as governance. And that's, again, why we're here today, is to report to you the results of our work. So the results of our work include what we call an unmodified or clean opinion on the city's CAFR, the city's financial statements. That's the highest level of opinion that we offer. We did also issue that report on compliance over internal controls as it pertains to the financial statements. And then we will issue, again, it's expected to be in March, that report on compliance and the opinion on compliance for the major federal fund programs that we are auditing. Our financial statements, if they're included in another document, beyond just being a standalone report that's presented on your website, we do request to be informed of when that might happen, because that could lead to other work that we need to perform. So at the time of the release of the audit in December, our audit report wasn't intended necessarily to be included anywhere else, but now we do know that with the preliminary offering statement related to the Series 2021 refunding bonds for Cracker Neck Creek, that our audit report would be included with that document as an appendix. And so because of that, and a few other things, we are included in that process to just make sure that nothing that we state is materially misstated or inconsistent with what our report says. The scope and timing of the audit, I would say, again, is consistent with what we planned this year, except for the single audit. Normally, our goal would be to have the audit and the single audit completed in December or earlier. And so that's our objective going forward, is to continue to do that. Of course, as Brian articulated, the federal government has provided extensions automatically because of the impact of the CARES funding, both on the auditees or the recipients, as well as the burden or additional work that's placed on the auditors in order to perform their responsibilities. So going forward, we intend for that portion of the audit to be done earlier as well. The city did implement 2 new accounting standards this year. They both had limited impact. One was around asset retirement obligations. The other was around debt disclosures. And the debt disclosures did enhance the debt disclosure of the city a little bit, but really it wouldn't be a significant implementation. The city does have financial estimates that are included in the financial statements, and we do evaluate those estimates and judgments and deem them to be reasonable in relation to the financial statements as a whole. And we also are required to point out to you any disclosures that we believe are sensitive. Those would include disclosures around the deposits and investments, the tax revenue, a key revenue source for the city, the long-term obligations, as well as the post-employment health benefits footnote. I'm pleased to report to you, too, we're required to report to you if we had any difficulties encountered in performing the audit. And I'm pleased to report that we did not have difficulties this year in conducting the audit. We are required to communicate to you any corrected or uncorrected misstatements as well. So those are audit adjustments that we identify and we make as a result of the procedures we're performing. And we did not have any corrected or uncorrected misstatements this year. We did work with management during the course of the audit to post entries that they made during the course of the audit and identified and provided to us, but we did not identify any adjustments that needed to be made. Management does make a representations to us, and that representation letter is attached to this document. And we didn't have any items of concern that would affect our retention as the city's auditors. So from our perspective, we can continue to be engaged to perform these services for the city. There are 2 new accounting pronouncements that will be evaluated upcoming. The first is GASB statement number 84 around fiduciary activities. That could have a limited impact to the city's financial statements. By limited, I think it could have an impact, but I don't think it will be all that burdensome. The GASB statement number 87 leases, that will probably take a little more effort to implement. Thankfully, that one will be with the June 30, 2022 financial statements. So we have a couple of years yet to implement that, but time goes quickly. And that's actually an extended deadline that was provided through relief because of COVID, that it would be implemented in 2022. So I wanted to take a few minutes too to go through briefly the status of our prior year recommendations to the city, as well as some other recommendations that we have this year as a result of our audit procedures. So last year, if you recall, we issued a management letter that included 4 items that were presented to you. And those 4, I'll go through each one of them individually and to update you on the status. So the first one, if you recall, dealt with the cash reconciliation for the city, specifically the utility funds and reconciling that to the general ledger on a timely basis. Really, that one was resolved prior to the completion of our audit last year, and the matter was not repeated in the current year. So the reconciliations were in good shape this year, and when we received them, they were done appropriately and timely. The second one we had, recommendation that we had, or finding that we had, was what Brian had mentioned in his introduction about the reconciliation of the general ledger to the financial statements, meaning that we had, because there wasn't a system established using the system that the city uses to ensure the completeness of the data from the general ledger getting carried over to the financial statements being reported, that linkage was unclear and took a lot of manual work to make sure that that information was being carried forward. And the current status is that that CAFR builder has been completed, and the drill down reports that we requested were able to be provided to us from that Munis system, as Brian mentioned in the introduction. And by the way, Brian, I'm kind of taking your status. If there's anything that you want to clarify from that status, you know, if you don't feel like I'm characterizing it appropriately, or want to elaborate, please jump in.
Thank you.
The third item last year was around the procurement policies. We had several recommendations around the procurement policy to tighten that up. Pleased to see that the City Council incorporated those recommendations and approved a new procurement policy prior to June 30th of 2020. So that was good for us to see. And the fourth item was a compliance item related to our single audit. So there's one particular form, it's called a SF 425, Standard Form 425, that's required to be submitted within 30 days of each quarter with the CDBG program. And just take a minute to elaborate a little on this. Our procedures were completed and or performed really in November, October, November on the compliance report last year. And if you can picture the calendar, that's already into the first quarter of the audit period that we just audited. So our finding, which was identified in late October, November, did result in changes that the city made, and they were made as a group all at that time. But because it was made at that time, it did carry forward into this year. So for this specific item, although we can say the processes have been updated and the forms have been completed, the first form for this quarter was submitted late again, but it ties back into the correction that was made last year. It was all done at the same time. And we have tested the other forms this year that were submitted for the SF 425 or its equivalent subsequent report, and those were done timely. So that's a little lead in into the compliance work that we've performed this year. We had, those were the items that were formally reported to you. I feel like we had a healthy discussion about them last year. There were other items that we identify as being of less importance, they're not required to be reported to you as governance. We do talk with them to management in more detail, and I'd like to cover those as well. And we have some of those types of recommendations too, to go through those briefly.
Chester,
Yeah.
before you go someplace, I just want to be clear to the citizens. A lot of people watch this meeting.
Mm-hmm.
Last year, it was a pretty, depressing meeting for you, because as I remember, it was one material deficiency and 3 significant deficiencies. But as I understand what you've just said, all 4 of those problems, all 4 of those have been resolved. Is that correct?
Yeah, I put an asterisk next to it. So yes, they've been corrected such that you would not expect to see them going forward, except for that one SF 425 report, which is repeated, but that's a function of the timing of last year's testing. Sure. So the response from management was timely, it was adequate, and those items didn't repeat this year, which does take effort and coordination. Some of those items, like the CAFR builder, as Brian mentioned, that's a significant. There's a lot of hours that management put behind that to make that happen.
And Chester, I was pretty hard on finance last year. You might remember that. And
I do.
I'm sure you do. And I'd like this time to thank Finance Department and Mr. Kidney. Your team has really come together. They have worked their tails off. And this is just wonderful news. And I want to publicly thank you and them. I know you worked very hard, and I'm not always the best as I was last year. So thank you very much to Finance.
I do appreciate that. And the thanks really goes to Cindy Gray and her team, and Nancy. The significant amount of hours to get that up and rolling was incredible. So thank you,
Mr. Murray. Go ahead. I'm sorry.
Sure. Yes. Thank you. And please, again, just stop me. I can get going. So, so these are other recommendations, other items that we talked with management that we didn't go through in detail with you last year. But again, I want to acknowledge the progress that's been made in these areas, as well as, again, some recommendations from this year's audit. So we had an observation last year about reporting specifically of Tiff developer obligations, and that change was implemented last year. And again, it didn't repeat this year. Some of the testing that we performed around the capital asset or fixed asset roll forward was more challenging than we would like, meaning that we feel like there could be the processes internally at the city could be improved to provide us the information in a different format or to improve the flow of reporting. We noted the progress that was made during the year, and also appreciate that the city has acknowledged they want to continue to make further enhancements to that process to make that even smoother. The same characterization would happen around the recording of the market value of adjustments to certain investments at the city. As you know, the city holds a lot of investments in different for different purposes, like a debt service reserve would have its own investments and so on. Making sure that those are all reported consistently to market value and reported to us in a way that we can cleanly tie them out. Again, corrections to that process were made this year. We observed them, and again, we acknowledge and appreciate that the city will continue to make further enhancements in that area. And then you can see this getting into a little granular item, but a water fund clearing account last year that's kind of a holding account for putting things where you don't know exactly where they're going to go yet. Were we going to capitalize them? Are we going to expense them? We expect there to be a balance in there on a normal basis because that's just the way things work. It takes time to allocate those items out. That balance was a little higher than we would have liked last year. That balance was in a much better spot this year. And again, the city has acknowledged they'll continue to make further enhancements in that area to get it down to an even lower balance this year. So for this year's observations or recommendations, we want to acknowledge that there were challenges with the payroll implementation this year. They do not, we did work through that from a financial reporting perspective. Remember, that's the objective of our audit, is to make sure the financial statements are presented appropriately in a material fashion. So that implementation didn't necessarily result in the flow of information being inappropriate to the financial statements for that testing, but we do want to acknowledge that there were challenges in that area, as you know, overpayments owed back to the city and others owed back to employees. And that's kind of a byproduct of our work being performed. So the status around that, and again, Brian, if you want to chime in at all here, but the outstanding balances had been identified by the end of December. Overpayments had been settled, and what the city owed has been paid out. And going forward, they continue to talk about streamlining internal processes, which I think is important for providing those resources to other areas to be able to make other processes smoother. And then continuing the communications with this committee about the status of that project. And then secondly, our observation around the development and build out of the accounting, finance, procurement functions. So yeah, go ahead, Karen.
Go ahead, Dan.
Can you I didn't know if can you guys hear me?
Yes.
Okay. I just had a question for Brian. While we're skipping past payroll, are we still getting complaints about paychecks or payroll, or is that fairly well smoothed out now?
So Cindy is on this call also, so she might want to follow up on anything specific. But as to any mistakes that the payroll system's doing, we have not had that for months. So well, there has still been from time to time like entry issues, but I think those have been pretty sporadic. Our new payroll manager, Holly, has started training and doing these meetings with all the timekeepers, and I think that's really helping and going to continue to help. But the actual calculations that we haven't had any complaints that would center on that. So I would invite Cindy, and I will also point out, I know it's later on the agenda that the question was, what is the status with the firefighter pay? And I would say that we've got the majority of payment agreements with all the firefighters that had been overpaid. We have the majority of those agreements in place. I think there's just still a couple of them, and Cindy and Holly are working towards getting all those completed. So we can start that process. Cindy, would you have anything to add to that?
Nope, you summarized it very well.
Okay.
Well, I know that's been a concern. Obviously, we all know for us as a council. So, again, all the progress on this is great to hear. So, thank you both. Sorry for interrupting, Chester.
My apologies, Councilmember Hobart. I didn't hear you at first. So, is there anything else, or continue to the last item? Okay. Great, thank you. The last item that we had as an area of recommendation is that the development and build out of the accounting, finance, procurement functions, those are all functions that we deal with closely. We want to continue to see improvement there with the workflow and so on. Our general observation is that there's still a push on certain people to get to get things out by the end of December, and in an ideal system, there wouldn't be that kind of exceptional pressure on people to do those functions. So we have seen again that there has been a spread out of responsibilities. We have seen cross training. We do know people have been hired and put in places where they hadn't been, months ago, and that just takes time to get people acclimated. So positions remain to be filled, is my understanding, based on budget availability, and people are continuing to be trained and get into those roles. So that kind of goes back to one of my very first comments about the planned scope and timing of the audit. We would like to see the audit be able to be completed earlier, and without kind of the urgency before Christmas time, if you will. So so those are our recommendations. Again, we do, like you said, Chairperson DeLucy, we appreciate the and recognize the strides that the accounting function has made in this past year. And to do it in a condensed time frame. If you recall, that the report was issued much later in the year, which condenses the time period that they have to correct the problems, and it takes a lot of extra effort. And my hope for the group is that this is leading to a better balance among roles within people, and a more efficient observation, or more efficient system because of these observations. So that really concludes our comments for the financial statement portion of the audit. And again, I'd be happy to hear any other comments or questions that anyone has, or clarifications that are needed.
I do have one question for you. What's the issue with the end of year last minute reporting? Is that something that we can change the timing on, or I hate anyway? No,
it's more of just you set up a timeline with the goal. We know the goal needs to be that that really the deadline would be the end of December, that the reports get issued. And that really has to do with your debt compliance requirements, that the debt holders expect to see the reporting within 6 months of the end of the year. And there just things come in. So for example, some of the things that you're kind of held to that you can't avoid would be like the participation in the loggers plan. So that loggers information doesn't often come in until late September, and to get that information in and to post it and run it through the financial statements properly, that's going to just happen later than you might like. But there potentially could be other things, and I mentioned some of them, like the continued improvements around the capital asset reporting to us. If we can get that in a little different process around that, it could go smoother, and it could be done more timely, and it wouldn't lead to people putting in a lot of overtime. Basically, that's really what it amounted to, overtime in December in order to complete the engagement.
Okay.
Mr. Perkins, do you have anything?
I do not.
Chester, I just have a question. Like at the end of the CAFR, we talk about the large debt obligation the city holds. And I've only really been involved in this audit finance for a few years. Does your report ever look at that long-term debt and the payments made on that debt? Or are you mostly into the operating finances of the city on a day-to-day basis? I'm just curious.
No, I would say it's more on the financial reporting part. So yes, we do look at the payments on the debt and make sure they're being applied, and that debt balance is being reduced appropriately, that the interest payments are being applied, and the principal balance is being reduced. We have a responsibility. There's a table. I'm just putting a box up because it's a table. It's kind of like a bigger table of all the principal payments that are due in the next 5 years, and every 5-year increment thereafter. We do dive into that as well and make sure that agrees to we get external confirmations about what the outstanding balance is, as well as compare to the the offering or official statements that are available to us to review. So yes, we do. We look at every single piece of debt and the payments that are applied to those pieces of debt.
Okay, so did you do the notes in the CAFR, or is that something that Brian did?
So the notes in the CAFR are a management responsibility that we then audit. So they present the information to us. We then make sure that it's appropriate.
And that has already been done. That's not going to be part of the independent single audit report, or is it?
Right. That has no correlation to the single audit report. The single audit report would be specifically around compliance to specific requirements that the federal government has with different funding sources. So we've got your CDBG program again. We've got a federal transit program that we're auditing, as well as a highway safety program that we're auditing. And each one of those grant agreements has different requirements. We are testing the compliance with those grant agreements.
Okay. All right. So if I had questions about any of your notes, it's really to Mr. Kidney I would direct my questions. Okay. All right. Thanks.
Sure.
Did that raise any more questions from anyone? Okay. Chester, you're released. You are free to go. That's exciting.
Well, thank you, Madam Chair. Appreciate the opportunity to communicate to you our results of the audit.
Thank you very much for your hard work. Thank you again. Okay. I have questions about the CAFR. Brian, would you like me to ask you the questions now? Like, they're real basic, really.
Sure. That would be great.
Okay. There's two kinds of debt that is mentioned within the financial notes, proprietary and governmental.
Mm-hmm.
And the governmental debt is $354,214,140, I think. Is that right? I'm looking at page 63.
Yeah, I was just going to point you to page 63, so thank you.
Okay. And so could you tell us, what is the governmental debt? Like, what does that mean? What do we owe $354 million for?
I guess when you're looking at these reports, we do divide up the accounting reporting between what we call governmental type of transaction, the governmental reporting, and business type reporting. So business type reporting are our utilities, our internal service funds, the event center. We report those transactions and those reports like a business. So
and are they called the proprietary funds?
They're proprietary. So the proprietary for-profit business type, that's that group. The other group then is what we call governmental. So that's going to be your general fund, all your special revenue funds, all your Tiff activities, all of that is going to be included in what we call governmental. So when you're looking at page 63, which is what you're referring to in that $354 million, you're looking at, and I'll go straight down that list because I think that answers your next items on the agenda also. So, and if you want, I can share the document also so people if they're watching online can see it also. Would that be helpful? So let me try this. Okay. So I'm hoping then you can see the page in front of you on the screen. Okay. So if I start going down again, this starts the footnote or the audit notes about the long-term obligations for the city. The first paragraph here just basically says that we do not have general obligation debt. So none of our debts is referred to as general obligation. That would take a vote of the citizens in order to obligate future taxes by debt. And this first paragraph is just saying that the city has no general obligation debt. So then it gets down to what kind of debt does the governmental funds have. The first one are these loans payable. And this first $22,000, this is, and you may know more about this than I do. Osage Parcel debt. I believe it was some transactions that the city did years ago to purchase some parcels. It's a zero interest loan, and you could see of that 22,000. You don't see it here, but there's only $15,000 of that left. So that's a minor part. But then you see, of course, this large increase, and that was the street improvement debt that was issued. That's the street, bridges, sidewalk, curb and guttering debt that was incurred last year, and that was for $17.9 million.
And I think that's the one I was saying on Tuesday that was 15 million. I was wrong. It's really almost 18 million.
Correct. Now, where that $15 million comes into, though, you're right with that number means something. The $15 million is the amount was for the street and improvement. There was $2.5 million of that was for equipment. It was for trucks. And so the 17.9 million, you're correct. That's the total debt, but the $15 million of that portion was for the, I think we're calling it the deferred maintenance debt for the streets, roads, bridges. So you're right. Without knowing you were right, of course, that it was 15 million for the streets.
Okay.
All right. This next line item is obviously it's a big number. This is our outstanding TIF loans. These are the Crackernecks and the Eastlands and the, name your flavor. And I have those detailed down a couple pages down from this. It'll actually detail out the outstanding TIF obligation loans. And that's what that 127 million is. Capital lease.
$7 million down on it this year?
Well, as you can see, we paid $7 million down on it.
Awesome.
Well, is it? I would say it's good that it's going down. I will say some of the debt, the Crackerneck debt, have only been interest payments, interest-only payments against the debt. So the principal has not been reduced as it should. I would love to see more than $7 million paid off of $134 million. But again, and Monday evening, we're coming to the council to talk about the restructuring of the refunding of the Crackerneck Creek debt, which does take care of that particular issue. There won't be a lot of interest-only debt then in this line item.
Excuse me, Brian. We voted a couple meetings ago to use, I believe, $5 million from the utility money to pay off a bond or refund bond, I think is what you guys call it. And that was going to save us some money. Is that money involved here, or is that in the next sheet?
That's in the next, because if you will, that was Power and Light, which is a business type operation.
Okay.
The next item here are capital leases. And so the capital leases, these are, what you see is what it started with for the year. We made principal payments of $254,000, which leaves $755,000. This is radio equipment. There's some radio equipment that's outstanding on this, and I believe there's a fire truck also that was leased a couple years ago that's included in this. I'm sorry?
Electric cars is what I'm remembering.
No, so the electric cars were not actually leased externally to the city.
Oh.
That was a transaction between the general fund and the Power and Light fund. So that actually doesn't show up in this particular report, but I can show you where that is. There's another place where that's actually recorded. The next area is the neighborhood improvement district. This is for some sewer improvements that were done for a specific neighborhood. And I don't recall the name of the neighborhood, but the parcels that are benefiting from this that those improvements are actually the ones that are making the debt payments. So it's going from the property owners through the city and then paying for the bonds. So even though it shows up as a city debt, it's actually being paid directly from that neighborhood, and that's where that name comes from, Neighborhood Improvement District. I could spend a day talking about premium discount. Basically, what this means, it's an accounting function. It means when we purchased some bonds in the past, we received a premium on those bonds. We received more money than what we issued, and we have to capitalize that and depreciate that, if you will, over the life of the bonds. It truly is an accounting function, and I could get more into that. So if you have really interest in that, but overall, so you have $146 million as you would consider as traditional type debt. So when you think of the debt outstanding to the city, it'd be the $146 million. Then, to make sure that we're showing a complete understanding of the financial situation of the city, we also add to that obligation those other liabilities that we have. So the first one is this compensated absences. This is basically a math problem of if every single employee in governmental funds, the police, fire, finance, city managers, this is their compensated absences. So this is their vacation and sick. So if they were to leave, this is the amount that we would pay out in vacation and sick. And so obviously we would hope that, all 1,100 employees wouldn't leave at one time, but if they did, this would be the amount that we would owe to those employees. For the governmental employees would be $17 million. And this is important because this is people, there are ratios that people look at whether or not we have more than or less than what's normal for a community. This OPEB liability, OPEB stands for other post-employment benefits other than pensions. So this is our retiree health insurance liability. So that's, and it is an unusually large amount. Again, happy to report that 2 years ago, our last year's financial report, we've lowered it $117 million. And that was simply from moving the post-65 retirees onto a separate plan outside of the Stay-Well insurance. And so this used to be considerably higher, but we were able to cut that down. But as you can see, it's still a good sized liability. And then the net pension liability then is the liability of everyone's retiree loggers obligations. So yes, you add those to that amount to the outstanding debt, and that comes up to $354 million.
And okay, and that's really what we owe regarding the governmental angle. But then
Governmental?
Yeah. But then to add to that, we now have to look at the proprietary.
And here's the proprietary. You're exactly right. So these are the electric bonds. These are the electric department liability for retiree insurance. Here's their pension liability. Same for the water. Same for the sanitary sewer, and then also for the event center bonds. So altogether, the business type activities has a $471 million outstanding liability.
So to get a total picture of the total debt owed by the city, do I add those two numbers, the 354 million to the 471 million?
Yes, yeah, that is exactly right. You would do that.
Okay, so my addition says the City of Independence total liability as we sit here today is $825,807,168. Does that include interest on this debt, or is that just the debt?
That's just the debt. That would not be future payments.
Wow. Okay.
But, I will add to that. There's additional commitments of the city. I mean, just full disclosure and transparency. Okay. This isn't it, Right. What's behind door number 2? So we have additional. Let me get up here. Chester had mentioned developer obligations, and I want to see if I may be going the wrong way on this, but we also have, here it is right here. Or, no, one more.
Are you looking for loans payable?
Yes.
That's on page 66. You're going the wrong way.
Thank you.
Sure.
So for the economic development transactions that we have, we've entered into agreements with developers that are pay-as-you-go. And so
Right, yeah. Oh,
here we
yeah.
go. Here we go right here.
That's not
So
good.
here,
What page are you on?
is that
See the page?
68.
Okay.
Okay.
Thanks.
So again, I just full picture, full disclosure on this. So this 30 million here are obligations that have been submitted to us by developers for these developments. However, we only pay them if there's increment tax brought in from the development itself. These are the pay-as-you-go. So when we say, oh, it's a pay-go financing or it's pay-as-you-go development, that's what this means right here.
But if the project does not produce the income, we don't have to pay it, right?
Correct.
So this
Correct.
30,742,261, although it's here, it's not like I have to go take a loan out to pay it. I only have to pay this money if the projects bring in the income to pay it.
Exactly. Yeah. But I wanted to be full disclosure on that also.
Sure.
In addition, in addition, we have in the utility funds commitments for purchase power. So those are also commitments that we owe out of the electric utility. And we don't have a summary of those, but I know that your assistant city manager put together one and submitted it to the POAB. But this just gives you an idea that even outside of the debt transaction, we've entered into participation with other, like this is Nebraska City. They issued debt. We entered into an agreement that we would make payments against that debt as part of the transaction. So even though, you mentioned that dollar amount, those two added together, there are other commitments that the city has, and they are all included in this footnote. So this is a pretty comprehensive listing of everything that the city owes.
Footnote 7. If I had a limited period of time and I wanted to really understand the financial situation globally of the city, would footnote 7 pretty much let me know where we are?
Yeah. Now the problem with these footnotes, these type of footnotes, that they are aimed at for people who do have a little bit more of understanding of the financial, how a city financially works.
Right.
We have the introduction section is called the management discussion and analysis, where we do more of a overview of what's going on in the city. But honestly, I think we could do better explaining the debt portion in there. So yeah, I would say if you're wanting to know about the debt of the city, yeah, you would want to go to the footnotes to really understand them.
And if I really wanted to lose sleep and add the interest that I owe on this debt, is that located in the CAFR anywhere, or is that document to be not?
Yeah, that's right here. That's page, what page is this? 65.
Okay.
This is that report that Mr. Moyer had talked about, that they make sure that they're grouped in every 5 years, but that has the principal and the interest for all the debt that I just went over.
Thank you. Okay. Okay.
Mr. Kidney, while we're on the topic of debt, is there a sort of a debt to revenue ratio, or are there some numbers by which we could, as a common person, understand the amount of debt that the city has in relation to financial health?
Yeah, absolutely. And so one of those areas would be, we do receive, when we issue debt, we do receive a bond rating on the debt issuance itself. And so we'll actually have that updated then, because, we're going to be issuing debt to do the refunding of the Cracker Neck transaction. And so part of that transaction is that Standard & Poor's is going to do a review, and they will do that type of analysis. And then we'll be able to share that report also. Then it's a public report, but then we should be able to get additional data that includes those ratios. But our municipal advisors actually do put those type of ratios together in preparation for our bond issues. So we do have an idea of what we expect to receive in our bond rating. So those are definitely standards. They Standard & Poor's, Moody's, they also come out with them, and they have these ratios, and they say, if you're a AA community, roughly your debt to asset ratio would be here, or things like that. And so we could get those prepared. Actually, we were preparing those right now because we're working on the transaction for Cracker Neck, so we could provide those in the future.
And what?
And that's,
I'm sorry.
oh no, that's the. I mean, everybody's heard of bond ratings: AAA, AA, single A, all those. Is that sort of the gold standard of financial health or rating of a city?
Well, it's certainly very helpful. It's that time where a third party disinterested, they don't have, all they're doing is they have an independent look at your ability to repay debt and your willingness to repay debt. And so that's a pretty good focus of an analysis to get a health of a community. There's other ratios out there. Other places do other type of ratios and stuff, but really I found that you can pick up a bond rating report and get an idea very quickly of the health of the community, financial health of the community, because they already include those type of ratios.
Thank you. Go ahead.
Thanks, Dan. Brian, a couple of times within my reading of this, I ran across the reference to the assessed value of tangible taxable property, how that matters in terms of debt service, that nature. What is the city's taxable tangible property? Is that in here anyplace?
Yeah, actually, so the last section of a CAFR is what we call the statistical section. And let me just get down to the statistical section. And I'm telling you, after you get your CAFR in your hands, you never have to pick up another document, because everything you could possibly want is in here, right?
Right.
I'm sure you're all very excited about that. So I'm quickly scrolling down to what we call the statistical section, and that starts
at the very end.
Starts on page 140.
140, that's right.
Yeah. And all of this information that you're asking is in here. I would, for this first one is your net position over 10 years. And so this, if you will, speaks very volumes about the health of the city's financials. When you look at 11 years ago, the city's net position for governmental was $295 million. Now it's $62 million. So you can, so again, you'll notice the large amount here in 2012. This is when you see Cracker Neck transactions coming on board.
Yep.
Here you'll see our OPEB liability starting to inch up.
Yep.
You might notice in 2018 we had a negative net position. This is the year I came on board and was like, oh, this is not a good place to start. But the first thing we did then was move the retirees to the post-65 retirees and change that OPEB liability. And so this in 2019 we're able to bring that back to positive. Now we'll see it start going back down because of the liability involved, but yeah, so these type of reports are very helpful because they give you the trend. They give you a 10-year. You can see the business type hasn't really changed materially over that period of time. And then this then adds those two together. Again, this just flipping through here, it gives you the 10-year data. Many people, governing bodies, elected officials that I've worked with in the past, this is usually the first place they'll go because they'll get a good idea of the trends and everything that's going on. Let me see. Down to, here's your sales and tax, use tax revenue over the last 10 years. This is a question I get constantly. So this is also a good place to go for those questions, if you will. A couple caveats, however, I believe there was a couple years where there was tax increase. So you have to kind of keep that in mind when you see these numbers change. Right. And then you can see this last year was the first year of the use tax.
Okay, so where's my tax tangible personal property?
Page 148. So 148, again, it gives you the 10 years. So our real property is 1.3 billion appraised. And then you can see the personal property is 269 million, railroads is 2.5 million. And then your total taxable assessed value is 1.6 million.
And that seems to be the number that is repeated most often in this CAFR. So is that like the number that I should really focus on?
I think so. This is what your property taxes are based on, or based on assessed value. Okay. If you remember, the assessment, each property has its own assessed value percentage, and then you take your market value times that assessed value, and it puts it all into this big bucket called total assessed value.
Okay.
And then this gives you then the estimated market rate then of the city.
Okay.
Which again is used in some of those bond rating scenarios.
To give us the A or the A plus or the A minus, right?
As one of those items in determination. They'll look at the value of the community because again they're focused on what is the value of the community and their willingness to be able to make the debt service payments.
And I noticed the second note on this page says the city does not assess taxes on personal property. Therefore, we're using the state assessed value as our value in determining what is appropriate.
Well, we don't have a tax on personal property.
Right.
But we still know we know how much it would be if we did, because we know what the assessments are. Yeah.
And that's we use the state number in determining, like, can we afford to issue a bond on this or that? Like, we can only assess bonds or issue bonds against, for example, 20% of our taxable property.
Yeah, again, that is only if it's a general obligation debt.
Right.
And we do, and the city has not done general obligation debt. So we actually don't have outstanding general obligation debt. So that 20%, that doesn't come into play with us because we don't have those types of debt transactions. All of our debt are basically leases where so for instance, we go through the Missouri Finance Authority, they issue the debt, and then we come back in, we do a lease back with the Finance Authority.
So Brian, just out of curiosity, so when the school district puts up a general obligation bond to the public, are these basically the same numbers that they're using to quantify what they're asking for?
Yeah, actually, and then we actually have that for the school districts also in this document. So here's the property tax rates, but we should have something we call overlapping debt transactions. And if Nancy's on the call, she might be able to point me straight to, oh, here it is right here. So page 159 of the CAFR will actually show you the, it doesn't have the assessed value on it, but it does show you the outstanding debt for each of the school districts, because our citizens not only pay the city debt, obviously, but they also pay the school district debt. And so this, again, is another thing that the bond rating and people hold our bonds look into, because they understand that, it's only a finite number of people who are paying this debt back. But yes, they would have the same information about the valuation.
What does overlapping debt mean? I think I know what it means, but could you tell me anyway?
Sure. So for instance, if you're a citizen in City of Independence, we have $146 million in outstanding governmental debt that you're responsible for, right? So a property owner in the City of Independence, their government has issued $146 million, and so they owe that because they're part of the government, that they're a citizen. Overlapping means, well, you also owe a portion of the school district debt because you pay not only taxes on your city, but you also pay taxes on the county and on school districts also. So overlapping means that you not only are you paying $146,000 or $146 million, but as a city as a whole, there's another $184 million of school district debt.
Okay, and it's broken up into four. Okay.
So our direct and overlapping is $331 million if you include the school district debt.
Thank you. Oof. Any other questions on the CAFR, gentlemen? No, okay. We did sort of segue into the next one, Brian, which was you, which is 4C, detail of outstanding debt of the city. Is there anything you would like to add on one or, well, debt status? I feel like I would exhausted it, but
I would say, looking at that debt section in the CAFR, you're going to get pretty much what you're asking for on these questions.
Yeah.
That including the purpose of the debt, the schedule of the payments are on there. You had it.
Pull out one and give me an example, okay? Walk me through one so that I can do the rest of it.
So let me get back up to page 66.
You want to go to 60?
Oh, I'm sorry.
Probably 64 or 3.
Well, 64 is the summary, but if we go a couple pages down, starting with page 70.
Okay.
This will show you,
Oh.
it lists out all the individual transactions, debt transactions that are currently outstanding.
Awesome.
And they're sorted in year of issue. So
Yep.
the oldest one we still have outstanding is one from 2006. And so it'll give you the year, which is the series number, what it was for, and an idea of what the payments are each year, and then what the outstanding interest rate is.
And is there a schedule of payments anywhere, or would I look at each one of these? Like with Cracker Neck Creek, I think it was Cracker Neck Creek, we made 2 payments, one in September and one in March of each year. But I'm talking years ago.
Yeah, well, actually, in all of our debt, we make 2 payments a year.
Okay.
One is an interest-only payment, and the other one is interest plus principal, and they're 6 months apart. So that's how municipal bonds work. They're semi-annual payments with principal once a year and interest twice a year. So yeah, all of our payments. They don't all come out the same months. Most of them do. A majority of them kind of follow the same months of payments, but some, with all this debt, we've got debt being paid all the time.
And is March and September the months where we really get hit most often?
Nancy, would you mind speaking up on that one?
Hi.
Hi.
Yes, I would say that most of the Tiff debt is March and September. I think Cracker Neck might be in April and October. Might be the one that's a little bit different, but most of them are going to be March and September. The utilities, I believe, water and WPC are, I want to say May and November, and IPL is June, December.
June, December. Thank you, Nancy.
You're welcome.
Great. And then are we looking at doing any amendment? Oh, we're going to do an amendment. We're not doing amendments to TIF agreements, are you?
No.
Okay. And
No.
you're looking at refunding the debt. We've already talked about the 5 million. Are we talking about refunding?
Oh, okay. So let's get back. So you asked the question about the IPL paying off some debt.
Yeah.
And that's called defeasement. So we're going to defease this bond right here, and this is the Electric Series 2010B bonds.
What page is that, Brian? Just so I can go back.
I'm not 73. Page
Okay.
73 of the CAFR. And so in March is when that's actually going to hit. There'll be a $10.6 million cash payment. It'll get paid to into a trustee account, and then the trustee will make a payment then all back to the bondholders to pay off their outstanding debt.
Okay.
And that's I think it's March 15th is when that's occurring.
And so that will be paid.
Yes. Yeah.
Awesome. Awesome. Any other questions on our debt situation, gentlemen? Or Brian, do you want to add something that we weren't smart enough to ask you about?
You guys are asking great questions. I will point out, and if people really are interested, and if you want to get more in depth into the debt, I would point out that we do have a website dedicated strictly to investors, and it's called In-Depth Mo Bonds, and it's our investor relations site. So if you could still see my website, you can actually see then, I believe Councilmember Hobart asked about bond ratings. You can actually see the bond ratings right here for all of our debt. Here's our water, sewer, and public power. If you were to go to our documents, there is more information on here than I think. I mean, here's a report we just put on there, outstanding utility debt. And this summarizes all the debt that we just talked about, just in a different format. We also include our CAFRs, our budgets, our rating reports are also on there. So I would invite, if anyone so inclined, could go here and go to our investor relations site. We have, this is kind of the utility side, but then you can go over to the economic development debt side. And we also include all the information about our economic development debt.
Is there a link from the city webpage to this webpage?
Yeah, we do on the finance department, under the finance department site.
Okay. So I would just go to finance and the link is there and I would hit it there. Okay.
Yeah. Yeah. So.
Wow.
So Brian, as I'm looking at some of these series that are good through like 2029, 28, 24, 22-ish. I mean, at some point we're going to start looking to how do we reissue those bonds?
Well, the way the yield curve works on municipal bonds is basically halfway through the issue. The interest rate is going to be higher outstanding than it is if you issued new debt, just the way the debt is structured. So, when you issue debt, each year has its own separate interest rate. So the early years will have low interest rates and then it'll start increasing. So about halfway through a bond issue, right here, 2010, it goes to 2030 bonds or 2035. We're sitting here in 2020. Well, the interest rate is starting to hit higher on this 5%, and we can issue new debt at 2%. So that's kind of a good rule of thumb, is probably about 10 years into a bond issue, you're going to have that opportunity. And in fact, most of our debt have what we call a call feature on it that legally allows us to call that debt and issue new debt and pay the old higher yield or rated the higher yield bonds off.
So when I see that interest spread here, that's what you're talking about then.
That's exactly right.
Okay.
Yeah. So you'll see quite a bit coming up, probably in 22 and 23. We'll see more opportunities for refundings.
Wow. Okay. Anything else, gentlemen? Mr. Kidney, do you have anything else on this issue?
Oh, no.
Brian, hang on one second, folks. Sorry. Is there a way? I've asked you before about this, and I'm just trying to make the information understandable. Can we get like P&Ls on each of the TIFs, or is that data already here somewhere? I'm something that's real simple.
So we kind of showed that last month. We did those reports showing the status of each of those transactions. Now I will say that was only for the debt related or the bond related issues. However, we do have a profit and loss statement, if you will, for every TIF, and that's again included in the CAFR.
Okay, I just haven't read it yet. I picked it up and it's a heck of a document.
It's a scary document.
It is. So I'll work my way through it. Then if I have questions, I'll get a hold of you.
Where would they be? I have a question. Assume I don't have, the stamina to understand. This is really a daunting document. It is. Where would I find the TIF information?
So the TIFs start on page 126.
Okay,
And it has all 22 TIF projects listed on there. And so the first page will be the balance sheet, and then the next page will be the income statement.
okay. Okie dokie.
That's a great question.
Wow. Oh, Mr. Toma Perry, did we lose you?
No, I'm still here.
Up next. He's trying to get on, I can tell. There he is.
I'm here.
Okay. That was a lot of tough financial information. Okay. And really, there's a few things that we have to ask you about. The standing items and update, maybe that would be the easiest to get to. And then the PUAB made a request. And then I'm confused about Tuesday if we have a request for you or not. So why don't we start with the update of your standing items?
Okay, if I can share my screen here, what I will do is walk through the interim report on the capital project.
Thank you, sir.
And let me get here. All right, can you see my my screen?
Yes, sir.
All right. So real quick, we'll just walk through this. So what I've done is kind of gotten to a place with this audit. The purpose of the audit was to look at all the capital projects, look back when it was approved, what's the current status, and then what's the estimated completion date. So what I've been able to do so far is go through over 260 projects as far as I can determine right now. Draw down the information for the last 10 years on the active projects in the project ledger. Now, within the accounting system, there's the general ledger, which is the official record, which is everything that we were just reviewing, and then the project ledger, where the when we have capital projects, we will set it up and track the expenses over there. And they feed back to the general ledger. The monthly operating financial report, like the CAFR, is from the general ledger. One big difference as you look at these numbers that we'll start to look at is that the monthly report excludes prior year expenditures and encumbrances. So the numbers we're going to be reviewing today are going to be higher than the monthly reports that you get. And that's something we can discuss later, not really today. Like I said, I went back through the old capital improvement monthly reports for the last, back to about FY11, and then caught up with the new system. In FY18, the accountant that did the capital improvements program retired. And then we switched over subsequently to Munis. So it's piecing various pieces together. Each project I've looked at, I've gone back in those 10 years and I've got that history recorded. Like I said, over 260 projects. There's been, over this time period, there's been over $300 million spent from these user fees and sales tax revenue. So it's, you look at it over that time period, our capital improvements program provides a lot of economic stimulus in the community at about $30 million a year, $20 to $30 million a year. So as we look at the numbers, we look at the projects, you'll see the project numbers I've left because it includes the year that it was funded. So you'll see a 6-digit number. The first 2 digits are the fund. So the 2021-99 number that I have there. Fund 20 is Power and Light Fund. second set of 2 is 21. So that project would have been funded in the current year, FY21. And then the last 2 digits are the number of the project that was funded in that fiscal year. So in
So
this
there were 98 projects before this one?
in this hypothetical, this is a hypothetical.
Right, okay.
So this would have been project 99 in fiscal year 21 in the power and light fund. And primarily these do sync up with departments by and large, except with one that I can remember. So gotten it to this point, and now I'm ready to work with city manager staff. I've talked with the city manager. He wants to link up some of this data with his capital improvements project that's going on. So we're gonna combine forces, if you will, and he will work with his staff to get the project descriptions while I'm going about my business of probably working with finance department, making sure I understand the general ledger and project ledger reconciliation, make sure I've got all those pieces. They do reconcile the ones that I've walked through. It's a matter of separating those prior year encumbrances and expenditures, and that's the work that's still ongoing. So diving into the numbers themselves, this is a summary of current active capital projects by fund. So you see I've got 7 different funds here: power and light, sewer, water, the utilities, and 3 sales taxes, and then the building and other improvements, which is actually a fund that uses, that gets money from these 6 other funds transferred into it. Occasionally, there's some Tiff money that's been transferred into that. So that's kind of a way to, that building and improvements, other improvements fund does not have a single source of revenue. It's kind of a place to combine where there are multiple sources that are being used. So you can see in the adopted budget, a little over 21 million. With the current appropriation, with what the money was left over from prior years, that jumps up to over 89 million. We spent just about $30 million this year, spent or encumbered. And so there's an ending balance of 59.5 million. That's through January. Now, looking at each fund, and these are going to be busy, but I wanted to kind of get these out there and not really discuss them all, but just to look at kind of the scope of what we're talking about, how many active projects are out there. Like I said, over the 10-year period, I've looked at over 260 different projects. Each of the funds has between 50, around 50, maybe 60 per fund. And you can see there all of the different funds there. This is the Power and Light Fund, broken out by the current year, what was in the adopted budget, what was rolled forward from the prior year, and what's the current status. So they have $11.4 million available right now. That is dedicated, that has been allocated to the projects that you see. So it's not just a number that's sitting there in a fund balance. It's actually money that's either left over from projects or money that is sitting there waiting to be used for a project that has been previously identified and approved.
Mark, excuse me, so would this be in like the restricted section?
Pardon?
Would these numbers be in the restricted area of the monthly report?
Yes.
Okay.
Yes.
Okay.
And it gets some of the reporting, since these are appropriated, you'll see on the capital projects line in the monthly reports, like with Power and Light, you'll see that adopted number, the 5.285, and then you'll see a bigger number for the current appropriation. So in that instance, it's restricted because it's already been appropriated for these purposes.
So looking at this, can I find out, or can I determine what is still appropriated to a project that maybe hasn't been not there?
Yeah, so if we look at, this is kind of the summary of what's going on this current year.
Okay.
And then what's coming, what I'm still developing is this look at each project.
Okay.
So
Sorry.
for this fiber optic program in Power and Light, I've got a summary. So we'll have a section up here that'll be filled in what the description is. Then I chose to put in more detail beginning in fiscal 15 in each year. So I summed up everything that was in the capital improvements reports as of June 30, 2014. So you can see there for this one, in the period up to June 30, 2014, they had $4 million appropriated and they had spent $3.6 million. Then each year, you can see that money came forward and what's happened, if it's old money, if there's new money that's come in. So for the last 3 previous years before this year, they were adding money to this program in their annual capital program. So at this point in this program, they have $72,000 as an ending balance right now out of the 107 that's been appropriated. So there's 260 of these pages that you'll have the detail. We'll be able to see when the last activity, is there money that's been sitting there for 2, 3, 4, 5 years that hasn't been touched yet? Or did a project end 2 or 3 years ago and then the money moved to a different purpose? That is one thing I wanted to point out here. If you look at the transfer in out column,
right?
During fiscal 2019, the $136,000 there. If you look at the note directly below it at the bottom of the page, that money came from project 2013-10, substation J upgrade. So they borrowed money. They borrowed money or transferred money from that project over to this project for whatever reason. You can logically assume that there was some fiber optics involved in the J upgrade or something like that they wanted to charge against this account or something like that. So, but this gives you the full detail. What I'm trying to do is get to this full detail. What has happened to the money after you approve the project? Did they use the money for that purpose? Did it get moved to a totally different purpose? Things like that, which could be some room for some policy making as you look at that. Do you feel like, well, we approved money for the fiber optic program, but then you borrowed money you approved money for the J upgrade. Does council need to know that we're taking money away from substation J? Should you be notified of that? Are you clear about those? So those are just some of the policy sorts of questions that finance departments will usually address as part of a transfer report, or some communities will have councils approve transfers from one project to another. So some elements of transparency there that could be discussed.
Okay. GL is general ledger and PL is Power and Light.
Right. PL is project ledger.
Oh, project ledger, I'm sorry.
Right. So then I guess everything else, we've got the water fund, and this is just repetitive and too many numbers, too many columns to really dive into with this. So that's really what I wanted to show you. I will get this in everybody's hands. After this meeting, I'll email this out. If there are particular, so then hopefully, depending on how I work with the manager, hopefully within a couple of months, we'll be back with the full report, and we'll be able to spend a little bit more time looking at some of those things. Begin to ask some of those policy questions if those are appropriate, various things like that.
Well, Mark, as you remember, I'm mostly concerned. I'm looking for money. I'm looking for money that perhaps has been allocated, but maybe the project has 5 years. So, just be able to let us know about those kind of things in this report. Do you think?
Yeah, and this, I went back to the slide, the summary slide, to say, okay, looking over here at this ending balance, within those funds, Power and Light has 11.4 million, sewer has 11.6, water has 12.9, 18.7 street sales tax. That's primarily the money that we just talked about.
Right.
So the questions that to be asked are, okay, within Power and Light, I've got 11.4 that's appropriated for a purpose. Is that still a valid purpose?
Right.
Do I want to redirect it? Do we want to take that appropriation off? We're not going to do that. Some of those, that's kind of the next layer.
Got it.
That we'll be able to begin to look at, and as we begin to have the discussions with city manager, we'll begin to get some of those answers will come forward. It's questions he's asking too. And there could be money that's sitting there that's, yeah, we just haven't closed it out, and it's time to do that, or something like that. So it's healthy for this to happen. Like I said, after Lynn retired, this is one of those things during implementation of Munis and all the other things going on. This has been one that hasn't been a real critical piece to the day-to-day activities, but it's an important thing to do to bring it up to date on occasion.
Gentlemen, any questions for Mr. Toma Perry?
Mark, are you able to do this on an annual basis?
Yeah, I could. I mean, hopefully we'll get to the point. The Munis software has a very powerful project ledger program that we could really, once we can get people hired to do some of these things, we should be able to print out reports very, very rapidly. It's a matter of feeding the beast, of course. We got to get the data. We got to get the data in there. This is a little bit of a tricky one because I'm combining from 3 different sources, from the old system, if you would, and now into the getting Munis up to speed. So, but within Munis, within the last 3 years, we've got all the data. It's all sitting there and ripe for reporting on.
Mr. Hobart, anything?
No, I'll just look forward to reading through it, and I'm sure I'll have questions later.
I just love to look at those columns of numbers. And the project names, like I said, I wanted you to see when they were funded, and also it's like, okay, well, it's been there for 7 years. And they're still working on it. So that's the next layer. We'll get more of the information on those as we move forward.
Do you need help, Mark?
No, well, the help I need is what's coming from the city manager with the descriptions. You know, I'll begin working with finance staff on questions I have about the accounting side, but the actual work and asking the departments, you know, what is this? Asking the engineers, what is this for and what's it doing and things like that. That's what's going to come through the manager's help. And that's what he needs for his own, as he's developing the capital program as well. So we're kind of working together to get 2 projects done.
Have you had any time at all to do the rest of them, B, C, and D?
No.
No.
I pushed this one to the front to get to this point so we could do the handoff. And hang on here, I'm trying to get back to get this off my screen. No, doesn't want to. Okay, so the overtime report is still, yeah, I'll get back to that now and begin working on that in earnest. Then there's a question on the agenda about the necessity for the fleet. My thoughts are, when we talked about this 6 months ago, it was before council approved the maintenance agreement, the rental agreement, things like that for the acquisition and disposition of the equipment. So I'm not sure if auditing, looking at this program is a good idea right in the middle of implementation of that. It may be more appropriate to hold off and do that, take a look at it. Okay, here's what we said, here's what we hope to do, and here's what we've been able to get done. So I just put that out to the committee for consideration.
Like, I guess I'm starting to get tired. Postpone it till when, Mark? Like 6 months, 12 months? I don't know what. I
guess see if we want to, I would at this point say let's put it on the next year's calendar.
Not burning issue, yeah.
We'd have enough time by that point that we would have acquired, you know, we will have been through all of the disposition and acquisition of the vehicles. We could take a look at, okay, here's what we've got. We could set a baseline for how that's going to work going forward and things like that.
What do you think, Jen? I'm fine with waiting. I'm excited about the capital project. I really am.
Thanks for getting that together, Mark, for sure.
Yeah.
And I know overtime's a big issue, so I can certainly wait on fleet maintenance as far as I'm concerned.
Agree.
Is this something, gentlemen, we should take back to the full council, do you think?
The capital improvement projects?
No, perhaps postponing the fleet maintenance and moving it down to the bottom of the pile.
Oh, that would be fine. I don't think we need to have that on the council action.
Okay.
I think we can do that here at committee.
Okay, I just didn't know.
Maybe for information only.
Okay. Are you okay with that, Mr. Hobart?
Absolutely.
Okay, and then Mr. Thomas Perry, remind me what I meant when I wrote down city finances.
That's the ongoing, on a monthly basis as different issues may come up. I'll take a look at the monthly reports, see if I see anything from those. Just kind of the ongoing job description of the city management analyst to look at the ongoing things.
And I assume you haven't had this time.
Nothing. No, I've not focused on that this month.
I'm going to go back now to 4D, Mr. Tomaperry. The PUAB made a request of the Audit and Finance Committee to ask you to view the interfund charge for services from IPL of $3.7 million. And I personally don't have a problem with asking Mr. Tomaperry to do that. Mr. Perkins, Mr. Hobart.
No, of course, that's fine.
I don't have a problem.
And could you maybe get to that within the next month and maybe report back within the next month,
Well,
Mr. Tomaperry?
my response to seeing that on the agenda is that I'm looking at people still in this meeting that can answer that question probably in the next 5 minutes.
Oh, okay.
Maybe not, but certainly they're the people that I'd have to go to find out how that was put together. Basically, what the PUAB wants to know is what's this allocation? Why are we paying the general fund money on a monthly basis? And it has to do with the overhead, because, for instance, the Power and Light Department does not have its own HR, does not have its own finance, does not have its own city council, human resources. All of those types of services are allocated out to the utility departments on a pro rata basis. There's a formula that the finance folks work through and develop to put into the budget. So in a nutshell, that's what it is. It's overhead. They're paying overhead to the general fund for services that they use, but that's just their way of paying their share of the freight.
So, Mr. Kidney, is there a formula maybe you could tell the PUAB what that is? I wasn't at the meeting. I'm not very clear on what it is.
I didn't see the request. I don't know the context of this request either.
Yes, we're working on, this is Cindy. Brian, hi. Brian had to step away and take an important call. So we are working on an allocation, and Mark is correct. The allocations are the overhead costs that the general fund does provide to the business-like entities. So we are working on doing an allocation so that everyone knows exactly what's included in those numbers. It's an actual project within finance. So we're working on that, and that'll be complete. I'm not sure actually when the estimated completion time is, but it is ongoing right now.
And Cindy, now that you mentioned that Brian had to step away, Mr. Norris also had to step away. They had a very important call, I guess, at 3 o'clock.
Yes, they did.
So,
yeah.
Of course, I picked this time to ask a question.
No problem. It's okay.
Okay, so let's just delay on that just for a few minutes.
Madam Chair.
Yes.
So this is, in the nutshell, this is the same kind of business formula that we have with my company at the store level, that we have to pay to the overhead back into the corporate, and they have it more itemized out on what that overhead cost back to the corporate level is. But it's similar to this. I'm assuming from what Mark is saying.
Yes, that'd be correct. This is Cindy again. That's what we're planning to do, is to do a itemized line detail, so everybody knows exactly what makes up those numbers.
Okay. All righty. The next item is the monthly report, written report, Munis implementation, and then old business. And we've already been here for an hour and 45 minutes. And Mr. Kidney and Mr. Norris had to take this other call because everybody else doesn't stop for us. So do you gentlemen want to continue with the meeting, or are we good and we're going to recess now? What would you like to do?
We can recess now and resume with this on the next month agenda, or do you want to recess and come up next week?
I personally can wait till next month. I think the
Okay.
staff is working on so many things. I hate to ask them to make time for one more meeting with us.
Okay.
Are you okay with that, John?
Yeah, absolutely.
How about you, Dan?
Yeah, of course.
So then the question, gentlemen, becomes our next meeting. Can it be March? Let's look. Can it be March 19? That is the third Friday. Cindy, will finance have the operating reports done by then?
They will be close to being done. We try to have them done by the 15th. We were originally scheduling this meeting, I know, for the 4th Friday to
For the
prepare,
20th.
so we could have that good time to prepare for it. Is that an option, or are you guys really wanting to go the 3rd?
No, I
20,
don't care.
26 is good for me.
Okay.
26 is fine. I would
That-
ask that we start at 2:30 though, if that's possible. It would allow me to get more stuff done at the office, my private practice. Is that possible, gentlemen?
Yeah, that's fine with me.
Dan? Okay. So let's go ahead and set it. Is that okay with you, Miss Finance Person?
Yes, that would be just fine. Thank you.
Okay, March 26th, 2:30 in the afternoon, Audit and Finance. And maybe by then we'll be in person. I don't know. We can only hope and say a prayer. Okay, after an hour and 50 minutes, do I hear any motion? Oh, before I make ask for a motion, is there any other items either one of you gentlemen want to put on our next agenda? So we could give the staff plenty of time to look at it.
Sorry to go back to the time. Did we say 2 or 2:30?
2:30.
Okay.
Right now, what I've got for the next agenda is everything from 5B on this agenda forward. But if there be anything else?
I don't think so.
And I know that Chester won't have this single audit report ready for us to discuss until April. So that's not going to be on next month.
I think this is a good start right here. If anything pops up in between time, definitely give timely notice, but I can't think of anything.
Okay.
Councilmember, this is Becky.
Hi, Becky.
Hi. So staff had kind of been discussing these agendas moving forward, and since finance puts a lot of documents together for it, it's been recommended that we start putting these agendas in Novus Agenda. So if the committee doesn't have any objections to that, we'd like to start that process to where all of the documents would be uploaded into Novus, and that's how we'll start creating these agendas moving forward.
I don't have a problem. Am I supposed to do?
Oh, that sounds good.
All right, good deal. So then we'll start doing these agendas in Novus Agenda for your next meeting. So for the March meeting, that's how you guys will start receiving these agendas moving forward. So any items that need to be added from the committee standpoint, if you guys can get with Sheila ahead of time like you have been, then we'll just make sure that those get added into Novus for you, and then finance will add their items. And then if the management analyst has any items that he needs to add, he can add his items into Novus Agenda as well.
Awesome. Awesome. Great. Okay, now, can I hear a motion to adjourn?
I'll make that motion to adjourn.
Seconded.
Thank you. Thank you all very much.
Thank you. Thanks, everybody.
Yeah. Thank you. Thank you.
Thank you.
All right. Thank you.